guys. Hello. I see now StreamYard went live. So, hello. Good afternoon, I would say. For some places, good morning. How are you doing today? Again, my name is Noura, tax and accounting professional, and the founder of Noura's Books. I'm an enrolled agent and a nonprofit CFO. So, today I want to talk to you about being an S Corp. I've been getting a lot of questions from a lot of people who are looking to start a business or who already have a business, but they are still an LLC or a C Corp. They are asking about if it's better for them to be an S Corp because they heard a lot about this, as you know, like if you've been watching all these videos on TikTok everywhere, like everyone's saying you have to be an S Corp, you have to be an S Corp, you save in taxes and all of these great subjects, right? So a lot of people thinking that if they are an S Corp, then that is the best way to be. Hi, Brittany. That is the best place to be. Well, I would say, like any other answer I answer, it depends. There is no right answer fits all. So before you decide if you want to be an S Corp or just an LLC or a C Corp, there's like a lot of things we need to think about. First, I'm going to explain a little bit the difference between being an LLC and an S Corp. If you are an LLC is not recognized with the IRS. It is on a state level. So it is recognized on the state level. There is nothing under the IRS says LLC. That's why when you file your taxes at the end of the year, you file as Schedule C. So you only file your tax return, your personal return. But technically, when you have a Schedule C, then you are kind of filing your a business return. That's why it's more expensive to file your individual return if you are a sole proprietor or you have an LLC, because now it become a return, a business return. It's not personal return anymore. So that's what you need to be aware of. You're only doing an LLC because you want to be recognized on your state, and also you want to have that protection, that's the veil of being business. So your personal property and everything that you have to do for your personal name, that is protected because you're separating your business from your personal. With that, like there's a lot of things to keep that protection. If you're not doing if you're commingling, meaning like you're spending, you're commingling your personal and your business, like spending sometimes from your personal account, sometimes from your business account, that's commingling. That you lose the LLC veil. But this is not our subject, but I don't want to I don't want to get sidetracked with that, so it's not our topic for today. So we're gonna keep going on this. So LLC, again, it's not recognized on a state federal level on the IRS. When you pay taxes, even if you do not take that distribution, well, we're not going to call it distribution on the LLC. Even if you don't take that owner withdrawal, you keep the money in your bank accounts, business bank accounts, you still are taxed for that, and you have to pay self-employment taxes. That is for the LLC, because regardless if the money that you earned from your business coming, it's where is it sitting? Is it sitting on your personal account or is it sitting on your business account? Either way, you are paying taxes on that. But remember, you are not paying taxes on your revenue. You are paying taxes on your profits. That is what you're paying taxes on. That's the taxable income. It's not the revenue, because you have expenses. You're paying for probably a contractor. You're paying for softwares. You're paying for marketing. You're paying for gas. You're paying for you're using your home probably, or you're paying for your office. All of these stuff you need to record, and the only way to make sure you did not miss anything and you take in everything properly is to do bookkeeping. So I guarantee you, if you do not do bookkeeping, you're losing a lot of deduction and you're paying so much more in your taxes. So that is how it's done. So you're paying for taxes on everything. Now, in another hand, S Corp is recognized by on the IRS level, on the federal level. But you cannot go register a company and say, I want an S Corp. It doesn't go this way. S Corp is a tax election. So you have LLC or C Corp, but then you file a form, or your accountant help you to do that. So you filing an election telling the IRS, hey, I want to be taxed as an S Corp. Again, you're doing that election, asking the IRS to tax you as an S Corp. There's a deadline for that, and the deadline is going to be March 15 of each year. This is when you can elect to be an S Corp for that specific year. So if you elect that, it can be retroactive from January. If you file late election, you can still do that, but you're gonna be under the IRS mercy, whether they want to approve you or not. So you want to keep that in mind. Again, so it is an election. So you don't go register as S Corp. You elect to be an S Corp. Now, there is some requirements for the S Corp. How do you save taxes with that? You don't, S Corp, since it's a corporation right now, you can take dividends, you pay yourself salary. One thing to keep in mind with S Corp, you cannot pay yourself dividend if you are not taking a reasonable compensation or a reasonable salary. So you have to be on payroll. You have to be on payroll. So that is when then you can take dividends. If you are not on payroll, you are not allowed to take dividends, and you'll be penalized, and you'll pay a lot of self-employment taxes at the end of the year. So you want to make sure that you are aware of this rule. So before you elect to be an S Corp, you want to see, are you ready for that? Because when you have a payroll, that means you're going to pay, you're going to run a payroll, which is another expense, which you then now, because you're not paying self-employment taxes, there's a reason for that, because you are paying payroll taxes. And basically, the self-employment taxes is there to compensate on your payroll taxes. So that's why you're not paying the self-employment taxes. So that's why IRS say, okay, no, you cannot just say, oh, okay, I'm an S Corp, I don't pay payroll taxes. I mean, self-employment taxes. You have to pay yourself a reasonable salary if you are looking to get dividends from your S Corp. Otherwise, you cannot do that. Well, now, if you don't want to put yourself on payroll, then you cannot touch the money from your S Corp. That's the rule. So you have to see, are you ready for that or not? And you have to evaluate, see, what's your long-term goal for your corporation or your business? What's your long-term? What you want to do down the road, in 5 years, in 10 years? This is what's going to help you in electing what do you want to file. Also, you want to see, okay, weigh the cost like, this is what we do. We do this in tax planning. So when we do tax planning for you guys, and like if you come to me, say, okay, I am not sure like what formation I should have, like, like now I've been in business and I don't know if I should elect S Corp, should I do C Corp, what should I do? What we do tax planning, we run scenarios and tell you exactly how much is going to cost you to be an S Corp, how much is going to cost you to be a C Corp in taxes, and in, you will see like how much, if the cost like will make sense for you, and you'll see a different scenario, and then you will decide based on that. Now, if it's not okay for you, if you're not ready for S Corp yet, then this year, it doesn't mean that you're not going to be ready next year. So you always have to be doing your bookkeeping. You always have to be doing consulting with your tax professional. That your tax professional, your relationship with the tax professional is not one time of the year relationship. It should be continuously, especially when you have a business. You should be regularly checking with your tax professional. And of course, there's a cost for that. But if you're doing bookkeeping, normally this can be added with bookkeeping or CFO services, where the tax professional consistently advising you and evaluate any decision you are making. So you are making an informed decision that will make sense for you and your business on the long run. That's if you want to be a real business owner. That's if you want to be a real CFO, a CEO. That's if you want to have a legacy, if you want to leave a big legacy for your children and family after you. That's if you want to be able to just retire and have your money working with you. That's if you want to have your business existing down the road after 5, 10 years, 15 years. That's if you want to be able to sell your business and exit and gonna have good value for your business, so you can have a choice of exiting your business. That's if you want to have a big plan for yourself. Otherwise, if you're just looking to have a business for a few years and then buy, never get big, never be able to leave the legacy for your family, never be able to retire on your business expense, then keep doing what you're doing. Don't do bookkeeping, don't do tax planning, don't do any of that, because you're not going to need it. That is the recipe for failure after, in a few years. And if this is what but I'm not going to call it failure, because that might be you. This is what you want to have. This is what your plan. You want something like to do for a couple of years and then end it. But if you don't want to be in debt after you close your business, or then at least you want to do bookkeeping and you want to plan, right? So you can actually be relieved and not really in debt on all these stuff that we don't want to be in. Now, again, if you are an LLC, the tax return is going to be with your taxes, and it's going to be it's going to cost you a lot more money than just doing the personal tax without an LLC, without an 1099. But if you have an S Corp, then now you have to have a different return. You're going to have a separate return. That's for business return. And you're not paying taxes on that. You're just issuing yourself K1. And then you're taking that K1 and that e-file and file it with your business return. Personal return. So that's what's happening with an S Corp. So that also an increase of expense. So you have to do two tax return. Yes, maybe your tax return is going to be not as the personal tax return, not as expensive as if you want to do it in Schedule C. However, it's still going to be like more, because K1 still a lot of information to fill in. And you're gonna have to pay for the return for the S Corp. So two different returns. And the return for S Corp is due on March 15. because that's going to give you a chance to do your return on by April 15th deadline. So just remember that, be aware of that. And if you're not sure if you should be an S Corp or you should keep your LLC, you can reach out and I'll be happy to talk to you. I forgot to put my link. Here's my link. So in this link, you can go ahead and book a call with me and we can discuss further. Like I said, the deadline is March 15 to elect an S Corp. And so you want to actually decide fast, and hopefully you are doing your bookkeeping so you can have data to decide to go off from and decide, have an informed decision. So make sure to have that. Now, let me know if you have any question before I leave. Otherwise, like, you can leave comments regardless of what platform you are watching from. Please leave a comment and I'll be happy to respond to you. And you can also book a call and I'll be happy to help you. Otherwise, I'm gonna leave you for today. One thing also, if you want to educate yourself more about S Corp, you can see the book on the link, same link. You can book a call and you can purchase the book. So if you want, you can purchase the book and I'll send you a copy. And then there's a section about S Corp. Actually, I didn't write that section. My colleague, like Shane, like she wrote the section about S Corp. You feel free and you can feel free to actually order the book from here, and you can go over all the information in the book that's from different tax professionals, and you can reach out for any of us. Again, if you want to talk to me, if you want to ask about S Corp, if you want to talk about anything that tax and accounting related, whether it's your business, personal, and nonprofits, feel free to book a call and I'll be happy to help you. Make sure you book a call as soon as possible because we are booking very fast as people receiving their documents. So again, I will leave you for today. I'll see you tomorrow. Let me know if there's a particular topic you want me to discuss. As I said before, I am here every day for the tax season except for the weekend. And if you are on YouTube, please make sure to subscribe and hit the bell button because you're gonna get notified when I go live. And also we noticed actually when we did our analytics for January and for every month last year, that we have more than 90% of people who watch our video that are not subscribed. And we appreciate that. If you like the channel, if you're getting value, please subscribe because this is going to help us and help us reach more people who might benefit from the contents we're providing. And again, have a great day and see you tomorrow.